What if I told you that owning a professional sports team is no longer just for billionaires? In the last 5 years, sports team valuations have increased by over 300%. And now, institutional investors are pouring billions into this asset class. Today, I am breaking down why sports team ownership is becoming the hottest investment opportunity you have never heard of. Let us get into it. First, let us look at the numbers. The average NBA team is now worth $3.5 billion. That is up from $1.2 billion in 2019. NFL teams average $4.5 billion. Even MLS teams are worth over $500 million. These valuations are growing faster than the S&P 500, and they are not slowing down. Media rights deals are driving this growth. The NBA just signed a $76 billion media deal. That is more than double the previous deal. Here is the big shift. Institutional investors are now buying sports teams. Private equity firms like Silver Lake and Arctos Partners have invested billions. The NBA even changed its rules to allow institutional ownership. Why? Because sports teams offer something rare. They are a hedge against inflation. They have monopoly protection, and they generate consistent cash flow from media rights, tickets, and sponsorships. It is like owning a toll road that gets more valuable every year. Let me show you the returns. The Dallas Cowboys were purchased for $140 million in 1989. Today they are worth $9 billion. That is a 6,400% return. The Golden State Warriors were bought for $450 million in 2010, now worth $7 billion. That is a 1,500% return. Even the worst performing teams have doubled in value. Compare that to the stock market. The S&P 500 returned about 200% in the same period. Sports teams crush the market. 3 reasons why now is the perfect time. First, media rights are exploding. Streaming services are paying premium prices for live sports content. Second, sports betting is legal in 38 states. That creates new revenue streams. Third, international expansion. The NBA is growing in Europe and Asia. The NFL is playing games in London and Germany. These markets are untapped. Early investors in sports teams will benefit from all 3 trends. But there are risks. Liquidity risk. You cannot sell a sports team quickly. It takes months to find a buyer. Concentration risk. Most of your net worth is tied to one asset. And valuation risk. If media rights decline, valuations could drop. Also, operational risk. Running a sports team is complex. You need experienced management. And regulatory risk. League rules can change. Taxes can increase. These risks are real, but for long-term investors, they are manageable. So how can you invest in sports teams? Direct ownership is for the ultra-wealthy, but there are other options. Sports-focused ETFs like the Pro Sports ETF. Media companies that own sports rights like Disney and Comcast. And sports betting companies like DraftKings and FanDuel. You can also invest in stadium REITs. These companies own the venues and collect rent. It is a way to get exposure without buying a team outright. Looking ahead, sports team valuations will continue to climb. Media rights will keep breaking records. International expansion will open new markets. And technology will create new revenue streams. Think virtual reality experiences, NFTs, and AI-powered fan engagement. The sports industry is entering a golden age, and smart investors are positioning themselves now. The question is not whether to invest in sports. It is how to get exposure before valuations go even higher. What do you think? Is sports team ownership the next big investment? Drop a comment below. And if you want to see how Kronos predicts sports-related investments, hit that subscribe button. We break down alternative investments every week. The data does not lie, but the market moves fast. So stay informed, stay disciplined, and as always, this is not financial advice. Do your own research. See you in the next one. This video is for educational and entertainment purposes only. It is not financial advice. Past performance does not guarantee future results. Always do your own research and consult a qualified financial advisor before making investment decisions.